My name is Jeff Rottinghaus. I am a portfolio manager at T. Rowe Price, and I manage the IG Wealth Management Large Cap Core Equity Fund. Our view of what's going on in the markets right now is there's been a sharp correction in asset prices as investors have tried to build in expectations for a demand shock post the coronavirus hitting the United States and the European Union. The first couple of weeks of this correction, what we saw was asset prices with very high correlation all corrected. Fortunately, central banks stepped in and provided much needed liquidity. In the last couple of weeks, we've seen the credit markets improve. We've seen the equity market improve significantly last week. And this is the same playbook that central banks around the world used in the 08 and 09 recessions to calm markets. And we saw a very strong recovery post these actions by the Federal Reserve and the other central banks around the world. We now think we're going towards a third phase of this correction. And at this phase, it's where investors have seen markets stabilize. Now we're really trying to just determine how much demand is actually being hit by the virus spreading throughout the United States and in Europe. The objective of the fund is stock performance greater than the primary index, which is the S&P 500. The portfolio is composed of roughly 60 all U.S. companies. The portfolio is style agnostic, meaning we'll own both growth and value companies. And portfolio is well spread out amongst all the different sectors of the S&P 500, so very well diversified. We believe the portfolio or this fund is well suited for any investor looking for exposure to the U.S. equity markets, particularly on the large cap side. So the fund has been actively researching new ideas in the consumer and industrial cyclical sectors of the economy. These are the areas of the stock market that have been hardest hit through the last 4 weeks of this correction. We're looking at these companies on two primary criteria. Number one, do they have the balance sheets to make it through this difficult period macroeconomically? And number two, do these companies have the management teams and the products that will thrive on the other side of this correction? And we're finding good opportunities amongst travel companies, given the decrease in consumer demand, but we're looking again for companies that have the balance sheets to make it through and that will do really well on the other side and be outperformers for our shareholders in 2021 and 2022. Over the next few months, we are likely to see some rather disappointing economic data. However, as long-term investors, we need to use this as an opportunity to find really strong businesses and great stocks for our clients once there is a recovery. No one knows the duration of the virus, but let's never underestimate the power of the central bank liquidity that's been injected into the system, as well as the human spirit and the lots of money and brilliant minds that are working towards finding a cure for this virus. There is going to be an economic recovery on the other side, and we're working very hard and very diligently to find the best investment opportunities for our clients going forward.